These past few minutes, so my apologies for the late start today. My name is Adar, I'm from Priority Software, and today we will be talking about VAT by Boxes. Welcome to our webinar today. I'd like to start with some thank yous. Thank you for Frida Azar's help in setting up this webinar. I'd like to thank Cherry Mallam and Paul Holt for their contribution and input. This feedback is very important to us, and we use this feedback all the time in order to improve the system and introduce more features. This feature, for example, the VAT by Boxes, the whole mechanism is based on your feedback and your requests. So keep it coming, and thank you for this feedback. Today we'll discuss the infrastructure for VAT in general. So it's basically things that you are already familiar with, but we will specifically discuss the infrastructure for VAT by Boxes. Most of the infrastructure is automatically set when you start a new company in Priority, but we realize that many of our customers have been running with Priority for a while now. This is a relatively new feature. So we will provide you at the end of this webinar with a most up-to-date Excel spreadsheet that will allow you to upload the most up-to-date definitions to an existing system should you want to set it up. Excuse me. We'll be running the report several times today in order to see the impact of various different scenarios on the VAT report. Submitting the MTD, the Making Tax Digital is really a technical step which we'll review, but we won't actually register or submit anything to HMRC. We will discuss the VAT calculation details and the VAT report, which are two of the most important elements because they are new in version 21, and ultimately they are used as basis for the report. We will also see how can specific transactions be manually excluded from the VAT report, again for whatever reason, and discuss various aspects of the VAT. We will start with reviewing the VAT codes. Those are, I suspect, familiar to you. We'll go on the system to review the VAT codes, which are assigned to customers and to suppliers. Each one of these codes has the corresponding account for sales, the corresponding VAT account on purchases, and additionally, there's a list of VAT groups that correspond with the VAT code and the VAT percentage that they attract. By the way, you may know already that right now in the UK there's another reduced rate, 12.5, which will end, I think, at the end of April, if memory serves me right, or the end of March actually. So here we would normally add another VAT code to represent this 12.5% temporary reduced rate in the UK. I haven't done it here, but this is where you would do it. The The tax report item is also something that is important, and we will discuss the country defaults, we will discuss reverse charge general entry code, and the boxes definition. Let's start with the VAT codes we've just reviewed on the system, and the VAT groups that we assign to specific parts on the system. So, for example, under financial parameters for part, we might have a part for that is a VATable part. Here I created a dummy part, a VATable part, like type of services, but clearly any item that you purchase, it could be goods or services, will be set. And if the VAT group code is not assigned, the system will automatically think and default to the standard VAT rate, which, as we know, in the UK is 20%. So you don't have to assign to a VATable item a VAT code. However, when we talk about reduced rate, we have to assign a reduced rate VAT code. The VAT code is coming from the list of VAT codes, and if you add another VAT code like the 12.5% that we mentioned before, it'll become available on this drop-down list. Again, this is something that I suspect most of you are already familiar with. Let's talk about a few scenarios and how would these impact the VAT report itself. We have here a multi-shipment invoice. The invoice has a VATable item, the one we showed earlier. This item is charged at a price of £1,000, and as a result, it attracts 200, which is 20%, £200 VAT. When we run the VAT report by boxes, as we would expect, it'll have an impact on box 1, 3, and 6. And we can clearly see that this invoice is included in box 1, 3, and 6, the VAT on sales in box 1, and the sales amount itself in box 6. The same way, we can see how a reduced VAT, and here is an invoice for reduced VAT, exactly the same amount, £1,000. This time it attracts 5% VAT, and as a result, if we run the VAT by boxes report, we see that the invoice is attracting £50. So we have the old invoice for £200 and then the new invoice for £50, and the total sales in box number 6 is for £2,000. If we have a zero rated tax, another scenario, again, a zero rate item that I created earlier would attract 0 VAT. And again, we will have an impact on boxes 1 and 6, where in box 1 you can see that even though it is included, it's included in as 0. There's only there's no VAT. Where in box 6 we've got £3,000, which are the total of the sales for this period. The next thing that I'd like to discuss with you is the tax report item. Tax report item is an attribute that is set on the chart of accounts, and we refer to 4 different attributes. Attribute number 1 is for output VAT that is set against the output VAT account. Attribute number 2 is the input VAT that is set against the input VAT account. Number 4 is set against the account that is effectively representing HMRC for us. That is the account that at the end of the period will hold the total amount that is payable to HMRC. At the end of the period, we will debit the output VAT account, the one that is highlighted as 1. We will credit the input VAT account, and we will credit the difference to the VAT debit and credit, the VAT control account. In this case, we're talking about is represented by account number 2001. The 4th attribute is attribute number 5, which represents the taxable income. That is for all the income accounts on the chart of accounts that will be displayed and take part in box number 6. So I think that the term taxable income might be a little misleading here, because even if it's not taxable income and you want to include it in your VAT report, you need to assign it this attribute for the tax report item number 5. If your income account is not set with this attribute, it will not take part in your VAT account, VAT report. And I think that's the main thing that I would like to highlight here. There are some defaults on the system that we can set, and they are set against the country. So whenever we set up a new customer and a new supplier, and we select the country that this supplier or this customer is in, a set of attributes will be assigned to that new supplier or new customer. And you can see these sets in the country settings, which is a sub-level form to countries. And here I brought 2 examples, one for the UK, where a UK customer would normally be we would normally trade in GBP. Same for the supplier, same for the customer. The VAT code for domestic purchases and the VAT code for domestic sales. The VAT record type is actually not relevant anymore. When we talk about VAT by boxes, since Brexit, we are not actually using the VAT record type anymore. We will see one exception where the VAT record type can help us when we want to exclude a specific journal entry from the VAT report. But as a basic setup for the customer or the supplier, these are less relevant. In the US example, a customer or a supplier that is assigned a US attribute, you can see the defaults are to the VAT worldwide and US dollars as the currency, and so on and so forth. You can set it up for any country. Out of the box, the European countries come with the Euro currency, and the VAT is the Euro VAT EU. That has been done since before Brexit. But to be honest, there's no harm in carrying on doing the same way. But for all intents and purposes, you could also use the same code, whether it's European or American. The rest of the world now is the rest of the world. We will. This is something that we will part of our continuous improvement. We are changing the defaults for the countries. We're changing the defaults of our VAT codes and the VAT by boxes definitions. And if you guys see anything that you believe needs to be changed, please come forward, let us know, and we will do something about it. Reverse charge is a concept that we have to use every now and then. I copied this link from HMRC website, where it says under what circumstances you must use the reverse charge rule. Just in a few words, the reverse charge is, I'm sure you know, but is when a certain transaction, an invoice, although it doesn't have VAT on it, we need to register it, post it to the ledger, where we debit and credit VAT input and output, which offset each other, and therefore report to HMRC that invoice, even though it doesn't have any VAT. And there are all sorts of rules to when we should use the reverse charge, and you're welcome to go on to the link on HMRC. We will send you the presentation at the end, and you can just click the link and see the rules as they appear online. Now I'm going to discuss how the infrastructure behind the reverse charge is set. So what we see here is the reverse charge journal entry code, and a supplier or a customer, which we will see later, sorry, not a customer, only suppliers, will be assigned with the reverse charge a journal entry code for either a credit memo or a debit memo. And as a result, the system, as you can see in these slides, will credit and debit the tax account according to the local tax rate. How does the system know what is the local tax rate? So if we look here at the reverse charge VAT code that I set here, you will see that I assigned a reverse charge code. That is a reference. So the invoice, although it has a VAT code of reverse charge that doesn't attract any VAT, it will still refer to the reverse charge reference of 002, which is VAT on domestic purchases. And on VAT code 002, I have the exact percentage that needs to be recorded on the journal entry for the reverse charge. So I'm just going to repeat this last sentence because I think it's important to understand. Again, the reverse charge code itself doesn't attract any VAT. The invoice itself, as it is logged on the system, won't display any VAT calculation. But when it is posted to the ledger, the VAT percentage that is taken for the purpose of posting the reverse charge will be according to the reverse charge code assigned to this VAT code. Okay, so there's a cross-reference between the reverse charge code and the VAT on domestic purchases. Again, this is normally set up on any standard system. Once you create a new company, these two journal entry codes automatically appear. This is an example of reverse charge on that is assigned under financial parameters for vendors. We will assign the VAT code of reverse charge, but also we will assign the entry code for an invoice and the entry code for a credit memo. So this is where we would set it up. VAT by boxes has been 9 boxes of VAT for as long as I remember in the UK, and this is just how it used to be, the green slip where we would set up and put the numbers. Our VAT by box, or MTD, it's not just us, MTD is replacing this form and submitting to HMRC the same data online automatically. What I would like to do now is discuss, and after that see on the system, how these VAT boxes definitions set up here. So each box has a list of criteria that indicate which transaction will be used in the calculation of the box. So, for example, box type VC, I need to go back for a second. Box type VD and VC correspond with the VAT value in the journal entry. That is the VAT value, like we saw earlier, the £200 added to the £1,000 of the sales. The BD and BC correspond with the value of the transaction itself, the sales or the amount of purchases. And the totals are totals for boxes. And let's have a look at the system to see on the system how it looks like. So on VAT by boxes, we have a set of criteria against box number 1. So for example, this means that any invoice with a code of 001 will be included in box number 1. But it's only the VD, the VAT debit of that invoice. Now, having said that, if the invoice is of type credit memo, as you can see here, the entry code is credit, then the system will take it in reverse. So it's a minus, it will be deducted from the VAT. And so on and so forth. You can see here that other type of codes and other type of entry codes will be included, some of them as debit and some of them as, some of them in plus, some of them in minus, according to the definitions that are assigned to this to box number 1. If we look at the totals, a total like box number 3, for example, which is a total, will have a definition under the totals for boxes, adding box number 1 and box number 2 together. We have the same thing under box number 5. where we are adding a box number 4, but box number 1 and box number 2 are in reverse, so in minus effectively, which means that the net VAT to be paid to HMRC or reclaimed, appearing in box number 5, will be as a negative value if we have to pay to HMRC. It is a negative value, but on the report itself, we show it as an absolute value sum. So we won't see the minus sign on the report, but as a value, it is a negative value. It is color coded, by the way. When you look at the report itself, it's color coded. Green means that you are due money back from HMRC. Red means that you have to pay to HMRC. When we run the report for VAT by boxes, there are a few inputs that we need to put. One is the from date to date, the range of dates, which period we are running the report for. I think that's obvious. And this was also the case in the old VAT report. The second one is the type of report. We will review the types of reports because I think this is actually quite helpful, especially the third type of report that was recently added to the list. Let's start with the summary report. That's the good old VAT by boxes report with the 9 boxes showing the values. And as you can see in box number 5, 207 is what we are due to pay to HMRC, and therefore it is in red. The detailed report is showing us every single transaction, every single invoice, each one in its own box, box number 1, 2, 3, and so forth. The table report is essentially the same report as the detailed report, but I think that it is easier on the eye to run and display it in this way. It's more compact, but it is still giving us the same level of information as the detailed report. But clearly, you have both options available to you, and you can use them. As I said at the beginning, VAT calculation details is a new form, and the whole VAT by boxes is based on this form, on the data that is populated to the VAT calculation details. What do we see here? This is a journal entry, clearly for a multi-GRV invoice. And under that journal entry, it is populating the VAT code, the VAT group code, the taxable amount, and the VAT amount. And there's more data here, of course, but these are the ones that I would like to focus on. And theoretically, although you see now in my slide only one record for VAT record, there could be several records under the VAT calculations because the same invoice may have different VAT groups. It could be for a standard VAT as well as reduced as well as tax exempt. So there could be a few lines in the VAT calculation details. But the system is taking the data from here in order to produce the VAT by boxes report that we saw earlier. Another new field is the VAT report date. Without the VAT report date, the transaction will not be included in your VAT report. Why am I emphasizing these two? Because if for whatever reason you need to process a journal entry manually and not have the system generate the data automatically like it does or did for me here, you need to make sure that you populate the data in these fields. You need to make sure that you populate the VAT report date. You need to make sure that you populate the VAT calculation details so that it appears in your VAT report at the end of the period. It is important when you, especially important when you initialize someone's system, a new system where you upload the opening balances and the journal entries. If you do that, you need to make sure that this data and these fields are populated according to the correct date and the correct values. When we want to exclude a specific transaction from our VAT report, we can assign a VAT record type of minus to the journal entry. It is done under the entry revisions, so this is post-mortem. Okay, it's already posted to the ledger, and we now decide that we want to exclude it. By assigning a VAT record type of minus, we'll immediately exclude this journal entry from your VAT report. It's a nice, quick way of doing it, and sometimes you need to do that. I'm going to review now very quickly and briefly how you would sign up to the government gateway. Each customer will have its own user ID and password, and there's actually an authentication. It will send you a text message in order to authenticate that it is indeed you. And once it's authorized, it will ask you to authorize Priority ERP as your gateway, as your vendor, because from now on you're going to submit to HMRC using Priority. Once you grant the authority, the site will generate a unique number for you, which will be copied. You will copy it and assign it on the system onto this procedure. You can see at the top of the slide that it is the setup for HMRC MTD that will then save a token from HMRC onto the priority system, and from that point on you can use Priority. Use Priority means that when you go to submit your online VAT return, you have to select the Transmit by VAT Report by Boxes. The drop-down box has both options, the VAT Report by Boxes and the old option. And here is the time for me to say that although the old method of submitting MTD is still valid, you can still use it, going forward, any changes to in the registration and the technical changes or bug fixing Priority Software will only invest in fixing the VAT Report by Boxes mechanism. The old mechanism is now discontinued, so it is time for us to gradually transfer the customers that are still using the old VAT report submission to the VAT Report by Boxes. And once you do, up comes a message: the program was successfully completed, which means that you now have submitted your VAT report. Now is the time for any questions. Let's see what questions have popped up during my presentation, if there were any. Yes. Let's see. A lot about you can't hear me. Yes, because at the beginning, I apologize. I muted myself. Okay, so Christine is asking about updates, recommendation set of the UK HMRC rules. And so, first of all, new customer installations clearly, and upgrades, and that's the structural updates which will be updated. And again, I would welcome your input on these changes. If you know something before we do, then please let us know. Second, in terms of the data itself, how to populate it onto the system, we will give you the most up-to-date Excel spreadsheet that we've prepared for the VAT by Boxes. You can use it in order to copy-paste it to any of your existing customers, as long as they are on the right version and can submit by using this mechanism. And going forward, just like I said at the beginning, if we have input from Cherry, for example, or from Paul Holt, who gave us some input about additional settings, then we will add them to the standard so that everybody can benefit from it. So the answer is yes. Of course, we will update it as new rules are coming. There are no other questions, so I will ask a question and I will also answer it, perhaps, maybe. And that is to do with VAT on import. Sometimes we have VAT on import as part of the invoice. And I think you know that already. There's a specific part number on the system that corresponds with a specific VAT code. And obviously, if you don't know, you can refer to our standard operating procedures on how to record VAT on import vouchers. But more importantly is that recently I learned that in some instances, you need HMRC to approve to the business. The business needs to receive an approval from HMRC whether he can claim that back or not. In other words, for us, it looks like it should automatically go to input VAT, claimable back, but actually you need to wait until an approval from HMRC. Now, normally this approval comes automatically very quickly and it's not an issue, but you may want to recommend to your customers to assign a different account, not the standard input VAT account, to the import, to the import voucher VAT code, and only when they get the approval, manually transfer the amount from this temporary account to the actual account. For further explanation, feel free to contact me if you if the need arises with one of your customers. I'm more than happy to share my insights here with you. Email me, call me. I will gladly help. So thank you for listening. Thank you for participating. Thank you for contributing to this presentation and for your feedback and inputs. And I will see you on our next webinar. Bye-bye.